Hey guys, what's going on? Welcome back to another weekly forecast slash breakdown. Before we get started, I'm going to quickly mention my VIP channel, which I have shared a link on a message on the free channel where I explain you can either join VIP through the EEFX bot, where you'd be able to pay monthly or lifetime subscriptions. Lifetime providing you access to the new course that I'm currently in progress of recording. And obviously monthly will just give you access to signals. If you guys want free VIP access, please do check out our affiliated broker, which is Forex. I use them myself. They have great spreads, and you always sort of get a good connection, obviously, to the market. I've never had any issues with slippage or sort of stop loss hunting and all that good stuff. And if you have any issues, please do message Andre. He is our sort of advisor that's sort of linked to the team. So he's just dealing with the clients that are part of EFX. So if you have any issues, just message him. So at least you know that you've got that support. So without further ado, we'd get straight into the weekly forecast. I guess the first thing I'm going to just mention is the trades that we took last week. The main trade being this 200 pip banger that we took on Tuesday, Wednesday, just before FOMC minutes when I was expecting a bearish move. I did share this analysis right around here. Actually, I completely forgot. I sent a free setup on the free channel. So if you guys are not in the free channel, the link is in the description. Join that free channel because you could get free setups that I do share on the VIP. So this was a sell limit that I ended up sharing on the free channel, and you can see that is from 24.26 area, and you can see once the price did tap into it, this was overnight. Price tapped into it. It's a shame it didn't take my second limit here, but it tapped into 26 and then dropped down to 24.13, so which is around about 130 pips, and then as time went on into the US session, price went and hit our main target, which are these lows, and that was another 200 pips right there, and then continued to go. I think it continued down to 2400 right here. So feel free to close the trade, blah blah blah. And then we did have our second trade where I was obviously expecting a price to reverse from this 4-hour fair value gap, which it didn't, which then allowed me to continue a bearish bias. So if you guys didn't understand this obviously I didn't share the analysis for that. But if you guys want that analysis, please do join VIP so you can have those guided entries, those analysis to just help you with your trading and help you with your bias. If you guys need that assistance, link is in the description below. But yeah, we had that sell position that we ended up taking. I only wanted to target these lows on a Thursday evening, and then we just ended up closing the trade, so we're very happy with that. So let's just get straight into the charts and have a look at these positions. I do want to break down this Tuesday position for you because it was a very interesting position indeed. Price did catch us out. We did end up taking a stop loss, right? And this stop loss was obviously at -1% right around here. You can see all of this chop that we had here right before the move. What I was expecting is, as you can see, that we have these relatively equal lows. When we see price just spike it a little bit and then continue to push up, I'm not very satisfied with this sort of move, and I would like to sort of target these lows again. So if we sort of put relatively equal lows here, you can see price was sort of retracing this impulsive move here. Once price got around about here, I was looking at the right time to enter, and we ended up going for a short round about this price. And then what price ended up doing is it pushed up another high. At this point, I don't want to sort of be in the trade if price just keeps pushing highs. You can see how much chop we had here. Like, it was just sort of down, up, down, up. A lot of people were getting stopped out. So at this point, I knew that price could go either way here. It could break structure and continue its push up, right, back up towards these highs, or it could. It's just not ready yet. So I waited, and I told the VIPs just wait until I saw that this high was taken out, and then price broke back below a previous swing low. A swing low, obviously, being, and for those who are in lifetime, you will get more of an in-depth on this, is where you have a previous, if you have a wick, right, and the previous candle on the left of that is higher than the wick, and the candle after the wick is actually higher as well. So you have two candles on either side which have higher wicks, but then the one in the middle is the lowest one. This is a swing low. This would have liquidity sitting below it, and this is how I look for sort of break of structures. Now you can see that price collected the liquidity above the prior high, and then immediately started to drop to take out the low. This would be a break of structure. Again, my higher time frame bias would be to target these lows here. So I would like to see a break of structure for a continuation lower. Once we got that break of structure, I looked for internal range liquidity, which would be this fair value gap here. So again, you guys are getting some serious nuggets if you guys are watching this video. Shout out to you guys who watch it every week. So I'm sort of to give you guys sort of little clues here and to help your trading for free. So you don't even need to see it sort of be on the course, but obviously the course provides you just that extra detail that you acquire when trading live markets. Anyway, back to the video. We've got this sell limit here around about 26 right there. Price triggered it, spiked into it perfectly right in the middle of this fair value gap. Stop loss above the high. So you had something like this. Stop loss above the high. Actually, I believe my stop loss was just a little lower, so it was around about 50 pip stop loss, which I sort of marked up, which I usually have as my maximum. And then the first target was obviously here at 24.16, and then we were targeting these previous lows, and then once price got there, what did we get? Spike, and price continuing to push lower, where? Down to 2400 and lower, which is this fair value gap right here. And price stepped into it, broke below, continued its push down, and at this point price is very bearish at this point. So I was looking for a reversal around about the 4 hour time frame. Oh, give me a sec. That's what I'm going. I was looking for a reversal around the 4 hour time frame, which would have been around about here based off of this order block there. So you can see once price got into it, it was around about, at least towards the end of Wednesday, price was already almost filling this fair value gap here. So I was not too keen on this fair value gap, on this order block, sorry, holding. So I decided to scrap it and go for a bearish sort of setup as price continued pushing lower. So price continued falling, and then we got into Thursday, which was our next trade, and which I'll explain more in depth for the VIPs. And this was sort of the move that we ended up catching when my chart couldn't even hold up on this trade. So the stop loss was above here, entry was there. You can see how close we got to stop loss, but price action ended up prevailing again, where I wasn't expecting price to take out the high. Why? It doesn't need to go back above there, right? Because we have already taken that high with this wick here based on this bearish candle, this white one. So prices are already spiked above here, collected the liquidity. We have fair value gap right up here as well, right? So it's needed to collect some orders. Okay, go and do that. Drops, break structure. We then enter on the retest, and price went back up there, right? I'm not going to explain why price went up there, because there is something on the smaller time frame which I was watching to see price reverse, but you can see that price didn't need to go back above because liquidity was already collected, right? So we had the stop loss above there. If the stop loss ends up getting taken out, I don't want to be in that trade. Why? Because we've had sort of a lot of chop, a lot of down move, up move, down move, up move. You can see it's not a safe place to be in, so I would not want to stay in that trade. But anyway, price and also, by the way, time was running out, right? It's that 10 a.m. candle. We want to sort of just be in that 10 a.m. candle and see price head straight to take profit, which it did. After that, this is New York Stock Exchange open half an hour later, 15 minutes, price went hit take profit 100 pips, and then price continued falling down to at least like 200 pips, 300 pips, whoever wanted to hold that. So that was our second trade we took. Absolutely fantastic trades. You can see these trades are usually like a if I undo this and then to put price action back up here, you can see that we have a 2R, 2.5R usually our trade. So if you do hit a loss at 0.5%, whenever we take another trade and it hits 100 pips or more, we end up making at least 1 to 1.5% back. So we'd always be in profit. So if you guys enjoyed me breaking down those trades and want to sort of see more, please join VIP. The link is in the description, and I promise you won't be disappointed being a part of this team. But anyway, without further ado, let's just jump straight into the weekly forecast. So I'm going to start on the daily time frame. I don't know where that reset button is here. You can see that price. What did it do as soon as we mentioned this previous high? And Monday, price immediately took out that high which caused us to say that liquidity has been collected above this previous high, and that price will likely push down to retrace this move up, right? So we have this move up based from this low here to this high. This is our current dealing range that we're sort of trading in, and our price is sort of retracing this impulsive move. It's come down to collect and fill these daily fair value gaps, which would be from this level here. You can see that this daily fair value gap was filled, this fair value gap was filled, and then we have one which is right here. And don't tell me it's not coincidence that price used this one as support, because we saw this was the sort of initial turning point of the impulsive move to attack the high. Price has now found this as support, so this is what I would like to expect next. We're coming towards the end of the month here, and price is sort of retracing on the monthly candle. So if you use that monthly candle, I keep refreshing the chart for some reason. So price is currently retracing on this monthly candle. So I would like to see a sort of price hold on this level here. This is a very key level I'm going to be using for this week, because if price sort of starts to fill this daily fair value gap or close below it, then we're likely to see price attack this low here, right? So let me just repeat that. What I'm going to be expecting is I would like to see price push up from here, right? The reason for this is that this is still currently, as we're speaking at the moment, we have a higher high based off the previous one, obviously, and then we have a higher high here and a higher low right here. This is still in a bullish sort of structure, bullish order flow at the moment. We'd like to see what happens based off this daily fair value gap. Price has collected the liquidity it needs. It may want to dance around this level for a few days, so we'd like to see price use this as support to push price up. If price does that, we would like to see bullish price action at the start of the week, and then we would like to see how price reacts based on these down close candles. If it wants to use support to push back down, that's fine, but this is your key level that you want to watch, right? Because if price sort of dances around in this level, and obviously you have your down closing candles here, so you have an order block at the same time. So if you drag this across or open an order block, give me a second, order block here, we would like to see price not close below at least 23.20. If price starts to do that, then you're likely to start seeing that price is very bearish. It'll start dancing around, creating some more liquidity on the lower time frames, and then you likely see price wipe out that and then attack this external range liquidity right here, which is this low. If price does that, then this shows that price wants to break a previous low and break structure. This will then tell us that price is very bearish and wants to push lower down into obviously this impulse that we had in March, where price started its bullish move. You can see that price has collected a high, is now dropping. So you want to sort of use key levels to see where price can find support, or just use obviously you got your classic, your head and shoulders. The price will likely break below the prior low, retest and continue lower. That is one possible scenario that you could get, right? So that is what I'm waiting for. We'd like to see more price action printed, more data printed for us to watch, see what happens around this area at the start of the week. I would like to see price obviously retrace, so you could get bullish moves on Monday, Tuesday, Wednesday, and then Thursday, Friday could be a move back down. If price wants to continue up and you start seeing a very bullish sort of price action, price is failing to break previous lows and it keeps on taking out prior highs, then you know that price would likely want to push back above this high and continue its move. So don't rule out bearish price action yet. If we go on the weekly time frame, we can see that there is loads of liquidity sitting on the weekly time frame. We have weekly fair value gaps sitting right around here. So there's a reason why I still have these as templates, because it's very key to watch the weekly time frame. Price still needs to fill that area here, and we obviously have weekly fair value gaps down here. But the first thing and the only thing I would like to see before I start looking at these weekly fair value gaps is if this low breaks. If this low breaks, then my only targets would be to fill these fair value gaps, retest this order block, fill this fair value gap, and then that would be your sort of main discount area buy for gold for a longer term position for a potential continuation, because again, gold is bullish, so you want to sort of find prices as low as possible to end up buying it. But gold would have to mess around this area here first on the 4 hour time frame. So I would like to, the main key area, just to summarize, 2330 to 2300 price. What price could do is it could tap into 2300 and then reject, right? This is totally fine. You want to see if price closes below this box. If price starts closing and you see more candles keep pushing lower on the daily time frame or something, then price will likely attack this previous low. So just to summarize, obviously main move, I would like to see price start holding a support here to push back up, because again, this is just a retracement. We still haven't broken any structure, just broken a high. We like to continue. If price pushes into this box a bit more, and then you still see price failing to push up, price will likely break this low, tap into this fair value gap, and then you're likely to get some sort of retracement. If you want to get a deeper retracement, you can. You get a retracement, price will likely push a little lower here. So that's my sort of analysis. But going into next week, I would like to play it slow at the start of the week and then look for bullish price action. Based on that, we have had our retracement. It's time to collect some of this liquidity on this way down. And if price wants to continue pushing low at the start of the week, then we could start switching our bias for a retracement to sell only to break this previous low. So that's pretty much it from the weekly forecast. If you guys enjoyed and want to get some free analysis, the link is in the description to the free channel. Or if you want to get guided entries and sort of more mentorship from me, myself personally, then the VIP link is in the description as well. I think that's pretty much it. We've covered quite a lot of things here. If you guys love the breakdown, please don't forget to like and subscribe, and don't forget to comment your thoughts on the video. And if you learned anything during this video, if you guys stayed to the end, you guys are true legends. It's always FX. Peace out.